So good evening, guys. The recording has just started. My name is Divya, and I'm hosting you guys on our session today on break-evens. So here I'll be revealing some secrets about break-evens, which I have actually gotten from my previous study sessions. Okay, so it's going to be titled The Secret of Break-Evens because I know that definitely some of you have actually canceled break-evens from your trading plan because break-even is actually a way of managing your trades. And most people have actually canceled it. You see some trends on Twitter saying that they've canceled break-evens. Break-evens don't work. It's bullshit and different things like that. So today I'll be showing you guys some secrets about break-evens, when to place your break-evens in particular. Hope we can proceed. If we can proceed, just drop a text in the chat box so that I know that we're not leaving anyone behind. Okay, thank you. Okay, so we're starting from different patterns in the chat, which I've actually come across. You may actually see something like this or something similar to this from your own end. Now, for what I trade, I look out for what I trade. Remember, I actually trade normal SMC sweep break inducement is my most common entry, my A plus setup. So when I trade, I also still look out for my entry. So this is number one illustration. I'll be using patterns here. This is when price gets into your PY, obviously, and we have a bounce here. Oh, hold on. Let me make it clearer. Okay, yeah, something like this. Price gets into your POI, gives you something like this. It breaks this previous high, gives you something like this again, breaks, comes back somewhere here, and go. Another illustration is this. Price comes in here, goes back inside, sweeps this previous high, which means it's kind of crossed it and closed below it, takes this previous low before going. Another illustration here, I think these are the ones that I posted on Twitter. So here are other illustrations which I actually did not post. This one here, something like this actually happened today. And I'm going to show you guys on the live chats. This is it. Oh, hold on. One of two shots. So something like this. Yes. This. 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 Then price came back inside and went. And other illustrations here. So I'll be explaining all of them. The price actually broke this high. That means it took out okay, I've given this one here. I mean, we have this pullback here. Price sweeps this high. And maybe the following candle closed above it. It came back here and went. So we have many more, but I will showing you guys a few on the live chat. So this first illustration here is the one I posted on X saying there was a break of structure here. That means a full body candle closure here. And price came back to mitigate this area and did not touch our point of interest. Okay, that is triggering our break evens. You know that break evens are you setting your stop loss to your entry price so that when price reverses, you don't get to lose or profit any trade, any money. So here now, price did not come back to mitigate our POI, but maybe spread would have maybe taken the person out and it ended up being a profitable trade. And here, the illustration here was that price swept to this high. That means it took out this high and closed below it, making this low a weak low. Okay, I'll be pointing all these things in a chart. Making this low a weak low and price later came back to take it out. Here, the illustration here is that price broke this high, gave us a full body candle closure at this place here. Now, most people actually set their break evens after price has taken out this high, which is okay. But when you look for your entry and you see a continuation entry on your POI, I know most people trade like, let's say this is a 4-hour chart. Here is the 15 minutes time frame. This is a clean entry, like a clean opportunity. Please, can you stop that? Oh, hold on. Okay, so price closed above it, giving us a lower time frame continuation entry. Now, most people will see this continuation entry and still set their break evens, and price will still come back to, obey this, respect this continuation entry, maybe your fair value gap or your breaker block. But in this case, I'll be using sweep break and inducements. Okay, that's QML pattern. So price comes back, takes out this low and keeps going, and they're like they've lost out on this profitable trade. They're not going to set break evens anymore without understanding what just happened here. So, and here the illustration here is that it's similar to this, but in this case, price swept this high and the next candle also closed above it, similar to this, but not exactly, and still follow this lower time frame pattern. So when you see things like this, you should know that if price is giving like is saying that, oh, there's still a chance for us to come back to this POI and clear some orders before we move our way, you should not place your break even yet. It's not about letting your trade go about 1:1 or 2 risk to reward before you set break evens. No, and it's also not about price just taking out the first internal high or first internal low before you set your break evens as well. It's about understanding what price has done within your POI, confirming that price is not going to come back again before setting your break evens. Now, the first illustration I'll be giving you, it's on EU, what actually posted on X. That should be, let me check the time frame. So that will just be Swift. Okay, on the 1 hour time frame here. Okay. It was at this breakout and retest area. Okay, that means hold on. Let me mark the breakout and retest. I think this chart is kind of confusing me a bit. Okay, I found it. So this was the trend line. My entry was around this area. Went to the 30 minutes time frame to get a clean entry. Okay. So at this breakout and retest area, I use my entry method. This is the block and the fair value gap pictures above it. Clean entry for me. And I placed my position to around this area. Now, this is one of the illustrations that I actually gave, saying that okay, this is one of the illustrations that I actually gave. Now, if you see this particular entry, price has taken out this low, mitigated the first time, and took out this high. Now, for some people, here is their perfect break-even spot. Like once price take out this high and even close above it, it's their perfect break-even spot. And they are ready to set their break-evens without knowing what happened here. And price came back down, took out this low, triggering their break-evens before going back to profit. Now, I did not get caught in this. I did not set my break-even after seeing this particular price action right here. I waited till price take out this high. Now, what was I looking out for? When I saw that price has taken out this high, first, I saw that it closed above it on the 30 minutes time frame. Okay, that's good. It's a break of structure. Now, looking at this, it's a sweep and a break. Where is there? Meanwhile, there is no inducements according to my entry model. Seeing the price is creating a continuation entry. So price actually did this without any inducements. And when I don't see any liquidity in this form, the strong low in particular here is the liquidity, making here a weak low, whether price closed above it or not, because there is no liquidity in this particular leg. Okay, I can see a chart. Is there any issue? You can't hear anything. Is it just you or everyone? Okay, so I think, John, it's just you. Check your network settings and return to the session. It's recorded though, in case you miss. So, at this particular trading leg, I did not see any inducements. And when there is no liquidity, you are the liquidity, because I know most people will be taking their entries around this place, saying there's a clean other block, blah, blah, blah. So there is no liquidity here. If there was a pullback right here, let's say a pullback here, be rest assured that price will just mitigate this particular block here and not come to this POI and keep going. Now, because there is no liquidity, I knew that price is going to come back to take out this low. So I did not place my break even. And yes, price came back, took out this low before going forward. So I did not get stuck. And another thing I was watching out for in this particular pattern that we are seeing here is checking out other time frames also to see if this sweep break and this sweep and break without inducement is actually valid. That is me waiting for if um like engineered liquidity will form, or if an engineered liquidity will not even form. So how did I know that? Now, normally when I see this thing, is either I wait for an engineered liquidity or I know that this low is going to be taken out. That's an engineered liquidity at this area here, making this our liquidity. Do you get? So what I did was to check the 1 hour time frame. Let me see what structure is forming here. And it's also good to compare time frames and different candlesticks, because sometimes when a 4 hour time frame is telling you something right, the daily time frame is telling you it's wrong, and the 2 hour time frame telling you it's also wrong, then you know that that 4 hour time frame has comma. So here now, you can clearly see that it was a sweep here on the 1 hour time frame. So my major time frames are actually 15 minutes, 1 hour, 4 hour, and the daily. Other time frames are to use to check things like this that I'm talking about here. Maybe to refine my entry, or to check if this sweep is actually sweeping or the break is really breaking, something like that. So here now, it's obviously a sweep and it confirms this low as a weak low for me. Okay. So it confirms this low as a weak low and I didn't take it. I didn't set my break even at this point, and I waited for this to happen, and it happened clean. Then I now set my break evens, and guess what? It didn't come back again. It went straight to my take profits. I was targeting, I think that was on a Friday, Valentine's Day. Yes. So, I mean, this particular reversal point, I was targeting this area here, just this place, and price went straight there before even reversing to continue its trend. So now that is number one trade that I did not fall victim for when it comes to break evens. Now, number two pattern was this area here. This is another trade that I took. I took this sell before looking at this trend line and seeing the buy. And I also said I was going to make a video on this. Now I remember, so I can just kill two birds with one stone since it's the same chart that I'm going to use. I still have another chart to show you guys concerning break-evens though. So this particular trade here at this area here was another area that break-evens would have actually um messed with a lot of people. Let me take up this trend line. So seeing this particular entry here, I placed my entry here, my stop loss above it. And my take profit, I think it was also on a Friday. Yeah, it was also on a Friday. And I just closed. In fact, this is where the markets closed for the following week and it reversed with this trend line breakout and retest. Now for here, how do you guarantee that yes, price is not going to come back to my POI and I can comfortably set my break even? Now look at this here. For most people who randomly say once it has gotten to 1:1 or once it has broken out of the first internal low, you'll be lucky in this particular situation. But what if it was not this particular pattern that appeared? Now, what made me guarantee that price is going to not going to reverse? Looking at this area, I can clearly see my break after price mitigated me. This is the first break, and this break was kind of solid for me. And if you check other time frames, let's see 2 hours. You can see the 2 hours is also a solid break. Let's check the 4 hour. You can see the 4 hour is also a solid break. Do you get? Now, using my entry time frame now, using my entry time frame, I took the trade on the 1 hour time frame, and there is a continuation here. That is a continuation entry. When price gets to your main entry, it can still form another entry for you on that initial POI, and that's what price did here. Now, instead of me getting stopped out from price reversing here, I knew that price was not going to reverse, and I took my entry here. This one kind of missed because this was a news trade, and I didn't want to trade news that particular day though. So I missed on this one, but it played out perfectly using my inducements here and this other block, placing my stop loss above here and taking advantage of this particular pattern twice. So which is like two trades here without getting stopped out with break even. Now look at this thing here. You may say that there is no inducement here on the other time frame. Let's say the 2 hour time frame. Or the 4 hour. Let's see the 4 hour. So remember the other illustration we gave. We said that whether it's a sweep or a break, if there is no inducement, we either wait for engineered liquidity or we know that we are the liquidity. Price is going to take out our point. Do you get? So now, in this case, there was no liquidity on the higher time frame, but on the lower time frame, there was a pullback there, which is a clear inducement. Now, on this particular 4 hour time frame, to show you that price actually correlates on time frames, you see that there was no pullback here, but there was an engineered liquidity at this point. Price went down, came back down, took out this high, and gave us our take profits. Easy peasy at this point to show you that if it's not going to work the same way, it's going to show you the same thing that is going to work in a different way. So that was an extra confirmation that we're not going to get stopped out on break even. Nah, it's not going to happen. And this went well too. So another pattern I'm going to show you guys was the one that happened today on CAD CHF, right? Yeah, CAD CHF. So let me clear the drawings. Let me clear the drawings so I can show you guys clearly. So here on CAD CHF, there was a lower time frame entry today. Yeah, that was around here. Hmm, pardon me. I'm kind of seeing something. Okay. 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 Probably a buy from here, but that's by the way. So I saw an entry here on the 15 minutes time frame. Yeah, this one. And this particular entry is one entry that I'm sure majority of people that take this particular trade will get stopped out. So I had a trade on this area. So I decided to look towards the lower time frame if I can see any continuation entry to take advantage of. And I got one here. And I also decided to teach you guys on this break-even thing because it would have definitely played with a lot of people's mind with this multiple retest. So my entry was here, my stop loss was here, and my target was a mitigation block somewhere around there. So now we have about 3 mitigations here in my POI. 1, 2, 3. Now the first one obviously triggered. Most people would have set their break evens 1:1. They are good to go. Price will take them out. They'll start having doubts about the position, isn't it? Second set of people will actually wait for price to break the first internal high, which is this one here. And they're like, okay, we are good to go. And price reverses again and it messes up with their psychology. So how do you navigate this kind of situation right here? Well, first look at what price was doing. So now, first mitigation here, price has not taken out any high, that's not giving us any continuation entry, no structure, nothing. There is no need to set your break even, except if you're actually scared. That's the only reason that should make you set break evens at this point. Now, the second level, see that price swept this low and took out this high. Yes, most people will be like, okay, first internal high has been taken out and break evens can be set. But did you actually see what price did here? You can see if you check closely, you see that price swept this low, broke this high, and we have some pullbacks here. If you can see clearly, we have this one went up here, came down. And this is kind of like two candle pullbacks. If you check the lower time frame to be more clear, but we have it here. This, which is kind of like a clear pattern that price still has tendencies to go below this first pullback that is right here. Now, if you check the other time frame, which is the 3 minutes time frame to see things clearly, because at this area, it's not really clear. Let's use the 3 minutes time frame to see. Now you can clearly see the pullbacks. You can see this first bold pullback and you can see the second one. Now with this, if you notice clearly, you see that there's every tendency for price to come back to this low because of the entry model that I trade. Sweep break inducement. I look for my POI and I head to my targets. There is no reason for me to place my break evens yet until price has given me what I want. Probably until price has actually, that's if price is going to form a continuation entry, until price has validated that continuation entry and taken out the internal high before I set my break evens, or until I don't see anything relating to continuation entries that will make price to come down again. Now, first stop, second stop, price has taken out this high. You shouldn't actually set your break evens because there is an obvious continuation entry here. Sweep break and inducement with your POI around here. Stop loss here. POI around here, sorry, don't mark it out. Even though it has been mitigated on this time frame, I'm very sure on the 1 minute time frame will not be here. So there will be another block here. So price actually respected it. You can see that price respected it. Invalidation points at this point or this point and TP. So if you miss this one, you can catch up on this one. Now, when you see this kind of thing, you know that price is going to come back and you just keep your break evens to yourself and wait for price to validate this other entry before hitting your targets. Some people even go to the extent of setting break evens and still taking this trade again. I don't know how they expect price to invalidate the first one and validate the second one, thereby missing out on the first possible one. So back to our normal time frame. So at this point for me, and with the information I have, I know that I'm not setting my break evens yet. Now, another thing again, if that particular continuation entry was kind of very confusing for you that, okay, you can't really see your own thing here, maybe price is not going to come back, maybe price is going to come back. There's another obvious reason why you should not even set your break even after this particular second mitigation. You can see that price swept this high on our entry time frame. There's something to always note about your entry time frame, the place that you placed your entry. Watch how candles react. Now, on my entry time frame, there was a sweep here, which makes this low a weak low on this particular time frame. So there's a tendency of price sweeping this low for me. Now, can you check other brokers? You can check other brokers. Probably here was even swept if it's just Wanda, because I see things like this happening too. Or price just decided to just validate it because other time frames say that there is another internal break here that validates this particular pullback. But on the other hand, this is another reason, this sweep here is another reason not to set your break even until price has closed above this high, which is what price did at this area right here. So after this break, we know that we are safe and there is no need to be afraid again, and you set your break evens. That way you are safe. And obviously the market will prove to you that you are safe because if you look at it, price did not come back. And after I went to our TP, which is this mitigation zone right here, it's reversed to do whatever it wants to do. But for this position, it has actually gone real good. So I hope you guys were able to learn something clear from this. Yeah, it's actually recorded. Does anyone have a question? A quick question. We have about 6 minutes left based on Zoom's timing. Does anyone have a short question, or you guys were able to understand it clearly? I hope from now you're not be running away from break-evens. You just watch out for the patterns and ensure that there is no other entry being formed for price to come back again. You're welcome, Cecilia. You're welcome, Ikechukwu. Even using single candle order blocks that I actually talk about on the 15 minutes time frame, here is a single candle order block right here. After price mitigated us here, swept this previous candle's low. The next candle closed above it. This entire candle here is a single candle order block, meaning that price, it's very, very possible for price to come back here. And if the candle is too big and you're like, price may come inside small, but it may not touch here, you can use your gun box and measure 50-50 and see if the other 50% really falls, if there's enough gap, like from your point of like your POI now, something like that. And you see that price is still going to come back. It's a continuation entry to the single candle order block right here. And price still came back to fulfill it. So it's another way to even take an entry here. Or even using the week, 50% of the week. You place entry on 50% of the week. If you miss this first one, and you take your continuation entry from here, and boom, still the same thing. So it's every reason that shows that price is going to still come back. Okay. Yeah, I'm going to drop the recorded video. I'm going to drop it. So I hope you guys were able to learn something really, really quick. I'm sure you guys will not see this on YouTube. Neither will you see it on Twitter. If you see it on Twitter, tag me. These are actually things that I studied myself. I coined it out myself, wrote it down myself, and decided to share with you guys for free. So see you guys on our next um before break even. Do we need to go down to a lower time frame? um if you have doubts, yes, because if your entry time frame is already showing you something clean, there's no need to go to the lower time frame. I showed you an example of where we were seeing something really messy here, like the okay, like this particular time frame now is showing a sweep. I want to check if other time frames are telling us that don't mind, it is going to still work. Then you check your lower time frame. That's if you're seeing something messy, it's not really clean, and you just have doubts. Then you combine different time frames. There is also something I'm going to teach you guys on daily candles. I learned this one and I can still share with you guys for free. If you're placing your entries and you want to know if that entry will hold or not. I'm not talking about your setup or your POI or your key zone or all those black big English. I'm talking about looking at daily candles, just two candles alone, and you'll know if this entry is going to hold or not for the day. We're going to talk about that in our next video, though. Not next, maybe upcoming videos, though. So all these are simple tricks that will just help you be profitable, avoid unnecessary losses. Because for real, these tips will help you avoid unnecessary losses and maximize your profits. You won't lose out of profitable trades and be like, them, I hate break evens. And when you when you set some people when they set break evens, try to take them out and go to take profits. And when they do set break evens, price will not hit their stop loss. So it's actually very, 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 very horrible. It's a horrible experience. Well, I hope you guys will not experience such again. So see you guys next time. Video will be available shortly. Hopefully Zoom processes this on time and I'll share with you guys. See you guys later on. Bye. Invite your friends to the Telegram channel. You guys are gaining value. Don't be stingy. Share with them for free.